was just talking about Bitcoin yesterday. There's kind of an irony of what's going on with Bitcoin in particular, because Bitcoin's been under a lot of pressure lately. We've had about a 25% decline in Bitcoin, and we've seen a lot of sells lately in Bitcoin through transaction wallets, etc. So there's been a lot of de-risking. If you take a look at the BlackRock Bitcoin ETFs, significant outflows out of that ETF. It's ironic, but it's also interesting. And this goes to the point about Wall Street is that you always have to be careful what you ask for. So retail investors were begging for ETFs for Bitcoin and cryptocurrency. And Wall Street was like, okay, if you want them, we'll give them to you. And they did. They provided them. But what retail investors didn't understand is that as soon as Wall Street came to markets with ETF, it gave Wall Street a massive advantage to basically short the market when they want to, because they don't have to short the Bitcoin. They can just short the ETFs. And that puts that price pressure during corrections and makes these drawdowns probably bigger than they should have been. But again, what Wall Street does is not always to your advantage. You want ETFs? Sure, here's an ETF. That's not your advantage. That's to their advantage because it gives them a whole lot of liquidity.
It's always to their advantage. It may be to your advantage, but it's always to their advantage.
Right.
If they can make money and make you money, they'll do that. But they'll make money even if it means you losing money. Always keep that in mind. But the interesting thing with Bitcoin is the true believers of Bitcoin, I can't imagine would ever buy the ETF. You buy the Bitcoin.
Right.
You have it in your wallet. That's the purpose of Bitcoin. It's decentralized. It's not in the system. ETF is in the system. So you're attracting all these traders that just want to trade it, buy it, sell it. That can be good, but it creates a lot more volatility than you were going to have before, because you have a lot of people that are not really true believers. They're just in it to make some money, and they'll be very quick to get out of it. They can now short it. There's a lot more ways to trade it. You have traders trading it, not true believers. And that has kind of cheapened the customer base, so to speak.
Right. And that's what I'm saying is, like, the idea of cryptocurrency was great because it was going to decentralize things. It was going to be this kind of off-market asset that is not going to be affected by everything else. And then, of course, as more and more people wanted more and more adoption of it, it's become kind of a Main Street process now through Wall Street. Again, you have ETFs and all kinds of other instruments that are being spun off of that again gives Wall Street the ability to arbitrage trades, take advantage of upswings and downswings. And what Wall Street loves is volatility, because if there's volatility in something, that's where they make money. All these things that you beg for now create the volatility in the markets that is a huge advantage to those that are actually trading the position. My question, though, Mike, is interesting, is that there's been a huge rise in Bitcoin. I'm wondering if that as this gets more and more adopted by Wall Street, do we simply just arbitrage out the gains eventually?
Like everything else, that's what's going to happen.
Catch me daily on The Real Investment Show. The link is in the description.